reason my jeans are torn. Sweat coming through my shirt. Keep pushing even though it hurts. I'm chasing what I know is true. There's nothing that I would not do. When everyone around me drops, I'm never gonna ever stop. I won't waste another minute. No, I won't. I'm a man on a mission.
Welcome back to Right Quote Studios.
We're back. It's Hot Tip Tuesday.
It's Hot Tip Tuesday, Taco Tuesday. Not only that, but we've got Health Tip Tuesday.
We got the hot sauce on your taco today.
You're going to be hot and healthy when you get done
with
with it.
Steve, with Steve from Affordacare. So, hey, welcome back to the studio, Steve. How are you?
Thanks for having me, Amy.
Welcome back.
Yeah, you bet. And of course, we've got the leading man, Big Cat Baxter, right front and center. So,
Where he should be.
baby.
and he cheers for himself, fans.
No, that was
just
somebody
kidding.
else. That was somebody else.
Right. Many other
Fan-
Amy,
fans.
if he's not going to, nobody else is.
All our WhoCrew fans.
Yes.
All right, sweet. So today we wanted to talk about healthcare. So Steve, you're gonna fire away. So take it away, man.
You ready to get your mind blown?
I
We
am
are
ready.
ready,
I'm
man.
actually really excited because the products that you have and what we were talking about in the studio in past weeks, there's a lot
Some
of
cool
excitement
stuff.
and there's a lot of energy in Right Quote Studios and in the Right Quote office. So I'm
Yeah.
super pumped. So keep your ears in tune because there's good stuff.
And who would have thought that insurance would actually be exciting for once, right? So basically, there's two kinds of people right now that are looking. There's businesses that are renewing, and there's individuals that probably have their plan that's also expiring. They're renewing too, right?
Mhm.
So talk about the individuals. You basically got three different options as a consumer today. The first one is if you're healthy, you can get a massive 30-40% savings on keeping the same or better plan by just having an ability to do underwriting.
Wow.
Right? This is 5 questions, 5-year look back on cancer, heart, massive,
Major stuff. Yep.
And then basically with that, you get rewarded with a much better price, much better plan.
Super
So
helpful.
so basically before Obamacare, this is the exact plan that everybody had for 10, 15 years.
Yeah.
So we're not changing anything. We're just saying, hey, if you want one of the greatest hits from back in the day,
Yeah.
this is a way to still do that without
Wonderful.
sacrificing coverage
Cool.
or anything else. So
Okay,
I mean,
great.
again, this is no different than any insurance that exists today. You buy a life insurance, you buy a house insurance, you buy auto insurance. Every one of these companies is going to want to know what they're insuring, right?
Yeah.
Absolutely.
yeah.
Absolutely.
So that's why you see, I think, some of this division with these marketplace plans, which is, again, they're phenomenal for a lot of people. But that's where you see these healthy people, which is the majority of America, that just don't find
Fit.
out. Yeah. So this is
doesn't
the
fit,
perfect
right.
solution for that. There's
Okay.
2 more things that an individual can have. So one is for being healthy.
Oh,
Yeah.
good.
The second one is if they're not healthy, there's either a SEP, which is called a special enrollment period. If they lost their coverage, they can sign up today. Or if they wait till November, they can enroll with the January 1st date. And what that allows them to do is a non-underwritten plan that's guaranteed issue, and all pre-existing conditions are covered.
Wow.
Okay, so I just want to say
That's
that again. So all pre-existing conditions are covered because I think
Anything, yep.
that's huge for
Wow.
a
Yeah,
lot
that's
of-
huge. That's
Okay.
huge for a lot of people
Okay.
out there.
The third
Okay.
option is somebody that maybe doesn't have the financial ability to buy a plan right now. So a lot of times you see a lot of people, for the only reason, whether they're sick or not, that they can't afford it because of money. So right now on the marketplace, you're looking at probably 50, 60 grand or less, especially for a family. You're going to be getting pretty good discount. And that's a way that we can do both of those and compare and contrast which is a better option for, whoever we're talking
And that's
to.
kind of like getting the
Oh,
premium
that's
stipend.
great.
Yeah.
Tell
Yep,
us
yep.
about
The groups.
Group.
The groups. Okay. So groups, we're still insurance companies. It's the same exact thing, right?
Mhm.
So the best way I've seen to do this is kind of picture yourself as a consumer buying insurance as the actual insurance company. And so picture yourself insuring, let's say, a group of 20 employees.
Yep.
Option 1 is called a guaranteed issue plan. And it's basically like a sheet across the group. And you don't know if they're on their deathbed or if they're Olympic gymnasts.
Right. How would you?
There's- But what happens is they insure it, but they're essentially have to insure the worst case scenario possible, right?
Uh-huh.
And I would say 95% of every group in the United States has that plan currently.
95%.
95
Or more.
So would it be okay to even say 95% of groups are overpaying?
Mathematically, that is the definition of the plan they have.
Mm.
There's no insurance company that would take you with no information to underwrite from and give
Absolutely.
you a rate that's fair, right?
Right.
So
Yeah.
you're saying they're just taking the worst case scenario, given the premiums based on that, and then if it becomes less than the worst case scenario, the insurance company makes out like a bandit?
Yeah.
And if it is the worst case scenario, the insurance company still had that accounted for, so to speak, right? They knew that was the worst it would get.
True, but then that's where you see those 20-30% increase each year.
Yeah,
So if
there
you're
you
a
go.
company right
Yes.
now and you're seeing these increases,
Wow.
that's probably is the company being reactive versus what we do is be more proactive.
Imagine
Proactive.
that on I mean,
Wow.
Right Quote is
Wow.
definitely not 1,000 employees, but I'm just thinking, when you've got 1,000 employees
Oh,
all
yeah.
the way up to say 300,000 employees, that's a
Yeah,
huge.
it's called an underwritten plan with
Okay.
with groups.
Oh, great.
The
Yep.
difference is that nobody's excluded, nobody's taken off, nobody pays more money, and no pre-existing conditions are taken off or lasered or anything like that. So
Okay.
everybody is on the plan that wants to be on the plan.
Yeah.
The massive difference is that, for instance, like a 20-person group, we're normally seeing about $150,000 of premium a year and just premiums alone.
Yeah.
Right.
Okay.
Now, again, because this whole model is to making sure that the plan and the people on it continue to be healthy, we're going to incentivize those people that do these plans, and we're going to give money back at the end of each year for that.
Wow.
And so this group that not only
Wow.
20 people,
Wow.
went
Like
from-
a return of premium?
basically 100% is what it is.
Wow.
Okay.
On
And
a
so-
health plan.
Because when an insurance company want a lot of their people that they have a vested interest in their
Yeah.
health to be healthy.
Yeah.
So
Absolutely.
we're
100%.
taking a group from maybe $300,000 for a group of 20 down to $150,000 or less. And now we're giving them money back if they don't blow their plan and they just continue to be healthy.
Wow.
Wow.
So again, that's that proactive versus reactive approach,
That's huge.
right? And so
Okay.
that's why
That is huge.
doing this, we haven't had an increase on any of our groups in 5 years.
Wow.
Okay, that's some stats.
That's-
What was your thoughts when you first talked about that?
I was just blown away. Aside from going out and wanting to get my insurance license, I was actually so just so overwhelmed with it because it's such a great product. It again rewarding for good health, and not only that, but not having anybody excluded
Mm.
Of course.
was huge because
Yeah.
I kind of feel like it's easy then also to say, okay, is everybody healthy? But I also love too that there's more than okay, yes, you're healthy, but I think on this program it also does do enough education to even create some growth there. So I was really impressed, Steve. Very impressed.
I was super impressed. I was super impressed on how significantly this plan can impact the bottom line of business owners and the employees that participate in the plan. Like, I'm talking impacting where it's saving businesses tens of thousands to hundreds of thousands to millions, and it's actually putting money back into the pockets of the employees,
That
which
one
is
was
like
that was
it blows me away because
I mean, for an extreme example,
yeah.
one of our groups saved $1.05 billion of implementing this to help their plan spend less and cost less.
and obviously money back in the employees' pockets, which was
which is huge.
Yeah.
Which is huge.
Yeah, and so at the end of the day, not only are we making the plan better, but we're also then financially rewarding the employees through actual cash
Yeah.
to
Yeah.
their monthly.
Salary.
Yeah, and then on top of that, of course, and so look at everything you're doing, whether it be a group or an individual plan.
Mhm.
They're kind of like a pyramid, right?
Yeah.
So you have the insurance company that needs to make money, needs to win.
Yep.
They have a vested interest in the health of the group or that individual.
Yes.
And then by doing so, they're rewarded either negatively or positively by what they pay a month.
Right.
So when you can make all those things flow in a good way, it just is a rapid decrease in price where we're keeping better coverage.
I mean, that's amazing.
I
That's
love it.
amazing. These group plans, these level funded plans, that's what's
Yep.
the name of it, right? So on average, when you're going up against a fully funded plan, right,
Yep.
which is what you said 95% of America probably has, that you're saying when you go in there, what is the average savings that you're given for a business owner?
There's a lot of risk to it. And when you said level funded, we're talking about it's a fixed premium.
Mm-hmm.
Nobody's taken off. And again, we have people that are unhealthy on these plans. So we have maybe a group of 20. We have one person that maybe is sick, one person that maybe is going through cancer, one person with a knee replacement. Those other 19 people make that plan complete. So again, I want to make really clear that as a group, there's no downside to at least quoting this. And so
So-
the savings, to answer your question, we're talking minimum of 20%, maximum of probably 70%.
Wow.
With keeping the deductible and the copays and the network and everything the same. The employees would never even notice you did anything, except they might get a different ID card with a different logo with a major carrier. Have employees that sometimes take really, really expensive medications.
Yes. Yep.
One of the things that we're able to find, because we have an actual company doctor that the plan actually helps pay for, that can actually reach out and be proactive with these employees.
Oh wow.
So a lot of times what really messes up these group plans, regardless of how it's funded, is medications, right?
Yes.
So we had one
Yes.
employee who was taking a $700,000 a year medication.
Wow,
Wow.
700K.
Yeah. And that there's
That's
ones worse than that if you can imagine.
I
But
mean,
that's-
I'm
yeah.
just blown away by the 700.
Okay. So tell us.
that employee for the last 4 years was again making all the other employees pay more money. The renewals were just absolutely horrendous, and they got to the point where we either need to just unload and bankrupt the business, or we have to find a way to pay for this.
Yeah.
And so what we're able to do for free, as just a value add again, is we could have this doctor recommend an actual doctor that would come to their house instead of then driving 45 minutes each way once a week.
Wow.
And now we took away the hospital upcharge. We took away the doctor, added cost for that drug.
In office.
yes.
Sure.
$700,000 to $70,000 on one drug for one employee.
Oh my gosh.
Wow.
Wow.
So what did that do to the group? I mean, it must have just
And
made
so
it
at the
amazing.
time,
Game
they
changer.
were facing, I think, a 40-something% increase, and we're talking millions of dollars already.
Yeah, for sure.
So we're
For
talking
sure.
several multi-million-dollar increase on top of that.
Yeah.
So that not only lowered it back to zero, but we actually came about 30% ahead from their previous year. So that's that's one of those 70% savings
Wow.
by not even changing site of care, type of drugs, anything else, but
It was just
recommending
lining up your
alternatives.
networks and understanding how to use the policy better,
That's
right?
great. I love how you guys go
That's
through that
amazing,
with
Steve. That is awesome.
Well, and you guys do it so well too, because it's not about just quoting the first company in alphabetical order. You guys take the full holistic approach to make sure
Yes,
that
we
each
do.
person, and again, this is every state's different, every age is different.
Mhm.
So there's no one fits all for every employee, but there is one plan perfect for each company or each individual.
For sure,
Right?
yes.
Do it. But
For
bottom
sure.
line is
Right.
we're allowing them to we're paying those employees to actually take just everything from learning, education, and then not only paying those employees, but actually paying the company to continue that wellness
to stay
incentive
healthy,
for that. Yeah.
right? To stay healthy.
Which again, everybody wins. So there's no reason that you shouldn't do it.
I love it.
that's awesome.
Great. Oh, I'm so glad we had you in the studio today,
This was
Steve.
awesome.
Thank
We
you
appreciate
so
you.
much. So if you're interested, curious, and your company or an individual, be sure to give Right Quote a call. All right.
Man on a mission.